Hello, everyone. GIF in some
Oh, we've lost Dale. We've lost Dale. I know he's had some computer issues this morning, boys and girls. So let's see if we can get him back.
Yeah, we just lost him. I mean, he was there and then gone. Boom. So I'll take over. Wow, we lost him. So can you hear me?
Yep.
Morning.
All
we
right.
can hear you.
Well,
We
good
are
morning,
here.
guys.
Hello.
Good news is I'm you know what sucks is I'm since I'm positive COVID, but I'm like quarantined. I can't go anywhere. I mean, I could. It's just not right if I do, right? I got to self-quarantine at this point. But I guess the reason why I say that is just because I like feel better now. I feel good, but I just can't go anywhere. So how you guys doing?
Very well. We're expecting snow here in Athens in a couple of days, so that will be interesting.
What? Really?
Yeah.
Wow. When's the last time you guys got snow?
Last year, actually.
Oh.
The weather's getting crazier and crazier.
Oh my God, the world is like upside down. Well, Dale should be here soon. Let's hope.
Speaking about the world going upside down, did you see my pip in Bitcoin?
What? No, I didn't.
My first time ever.
Oh, look at this. Stelios put up pattern in the line.
I was talking about it in the chat room, and I was saying as soon as 40K gets hit, gets broken, I think it's a good short with the target around 32 and maybe, invalidation around 41, 42. So
look, let's take a moment and explain what a pattern in play is, because I think a lot of people misinterpret what this is. I think people misunderstand that, this is a buy, sell, or hold recommendation. No, these are really patterns that are, developed that we identify. And I'll tell you, me personally, I probably trade 80% of my patterns in play. And the reason why I say about 80% and not all of them is because sometimes I'm already exposed one way or another. So like if, for example, I am actually long the Euro New Zealand, just so you all know personally. But if I put the Euro New Zealand in because a pattern that was set up at that inverted head and shoulder pattern that I saw, I might already have New Zealand dollar short somewhere else, and then because of that, I don't necessarily trade the Euro New Zealand. But what these really tell most of our traders are, it tells people what our bias is. And exactly. I think that's the most important thing when you're trading, right? It's just like, hey, look, Stelios is bearish Bitcoin. I should take that into account if I am a fan of what Stelios does and I like how he trades. I'm going to respect the fact that he is, bearish Bitcoin. I'm going to take that into account as I'm trading, right?
Exactly. Yes.
Good. I'm just looking for affirmation here. So, as long as you agree with me.
No, of course. Exactly right. And it was a very kind of obvious support break. It's not a rocket science. It looked very nice technically. And
trading simplicity.
Since you are not a rocket scientist, let's go ahead and take a look at Bitcoin and see why that would be the case. Now, Bitcoin, as you pointed out, and you've been saying 40K is a big number. It's a big number for a few reasons, right? It's a big number, right?
Yeah.
And but B, it's also horizontal support. What else were you looking at there?
It was just that exactly what you say. The two touches, those two lows at 40K plus big round numbers, especially in Bitcoin, they tend to work and to be followed. So that's why I looked at that.
And so, one of the other things that I think we should identify here is, if you go to Ethereum, I'm going to take you over to a weekly chart, guys. That's a mess. Let's do it this way, because I have a lot of drawings there. So let's go to a different chart. Here's Coinbase. This will be fine. You take Ethereum, and we're on a weekly trend line, and you know, when you see a break higher and, you know, and a failure and obviously divergence, the risk now is that Ethereum breaks lower. And do I think Ethereum's going to $100? No, but, you know, to retest this breakout point around 1500, that's really not a huge ask, I don't think, based on the underperformance that we've seen of these cryptocurrencies and the I'm not sure. I don't know if I'm going to be using the right word. I still have COVID fog, just so you guys know. I want to say over leveraged of Wall Street, but it's that's not really the term I'm looking for. But because of, you know, the mass, I can say this, the mass saturation of Wall Street and how everybody's so hopped up on, you know, NFTs and, you know, metaverse and everything else. I think the risk is that you start to see these pull back. It's the same thing, you know, it's the same conversation we've had for a while. You know, it's kind of like, it's, you know, .com 2.0, you know, it's, look, the internet didn't go anywhere, but 90% of the internet companies or 95% of the internet companies that were publicly traded, they did go somewhere to zero. You know, the strong ones emerged, the Yahoos and the Apples and, you know, whoever else of the world, you know, survive. But, you know, the risk is you're going to start to see these cryptocurrencies really, you know, come under some pressure. And I think that's a reality, right? Especially as the monetary rug starts getting pulled globally. So what are your thoughts here, Ryan, Stel?
I'll let Stel carry on, seeing as he's crypto king at the moment.
on cryptos or in general?
Oh, well, I was just saying on cryptos. Any final thoughts there?
You know, I we were discussing it in the chat room, and I said, look, eventually I want to be long cryptos, but they've you know, they've been trading very heavily. We're breaking through some important support. We do have, we've said this again before, we do have Michael Saylor, the big whale, at around 30K. I think the market's going to try and push this trade against him, or, you know, it's the thing that we were saying before. When banks go into an institutional money goes into an asset class, it has positives and negatives. You know, the positive is that they basically lifted the price quite a lot, but now it's going to be pushed around. So I think in the short term, they are in danger of going considerably lower. In the long run, inflation, you know, everything else, all else being equal, I think probably it's a good. You know, I'm going to be looking to buy at a lot lower levels, but at the moment, I think short term it doesn't look good.
I'm bid at one. I'm bid at one.
Go ahead, Ryan.
1 million.
no, just one.
No,
Single figure one.
You know, I'm with you. I do want to get long some of these, you know, some of these names. I don't, you know, and it's hard to know which is right, what name is right, and where to be at. But I'll tell you what, they don't look constructive right now, and I would be really, really careful with them near term. And I know, you know, a lot of people are buying dips, but just, you know, think about like a plan, have like a master plan of like how you're acquiring these things as they're dropping. But anyway,
one thing I want to answer. Sorry, Ryan. Just one thing. A friend Richard says, "What does Bitcoin being legal tender in a country affect it? Like was it El Salvador or wherever it is?" You have to ask yourself, what percentage of Bitcoin gets used for transactions, for actually buying stuff? I think 0.1% or something like that, or even less than that probably. So I don't think that will affect it yet. So as long as it doesn't get used as a currency, which it doesn't, let's face it, you know, people are using it as speculation or as a store of value, you know, they think it's a store of value. So as long as that happens, I don't think it will change anything.
Yeah, I agree. And I also think that, you know, it's easy to look at the volatility in Bitcoin and all the paper millionaires and billionaires that have been made, and we all feel like perhaps we're missing out. But I think that the long-term money to be made is in the technology, is in the companies that are using the technology, even the exchanges, you know, the people like Coinbase, you know, they're the ones who are going to see the transactions going through. They're the ones who are going to be making whether the price goes up or down. And as I say, you know, looking at stocks that use a technology that is going to become mainstream, you know, maybe when the central banks take it up and it does become mainstream, that I think is your long-term investment opportunities there. But I'm still expecting an into, the dot-com boom to happen in cryptos. We get a big blowout, all these little coins and tokens get blown out the water, and then you start to see the cream rise to the top, and you get the big companies coming through.
And that's the same. I mean, it's amazing being in the markets now. I started in the business in 1996. That's when I first sat down and got my Series 7, and I started, selling securities. 1996 or 95, excuse me, is when I got my Series 7, Series 7 and 63, and then I started trading at a desk in November of 96. So but being in the business now for over 25 years, it's weird to be around for a full cycle, and guys that I've talked to over the last 25 years have always told me that each cycle of that we go through in the markets are 20 to 25 years, and it's because that's how long it takes to cycle in and out of a lot of people out of the industry, right? And so everybody forgets about the .com. Nope. We have a whole new swath of investors, and they're all Bitcoin billionaires. I'm using that term very loosely, but it's all the young, I say young, and I'm using that term loosely too. It's just, newer investors that, it's the .com. I mean, look, I was one of them. I was the equivalent of a Bitcoin billionaire back in 1999. That was me. I made money off GoToNet. And a lot of it too. And, I was driving around a 911 Cabriolet, and I was 26 years old, and I had no right doing that at all. But you know what I mean? It's and I learned my lesson. I got it. I got my ass handed to me. And a lot of people are going to do that too. I mean, it's the cycle of life in the financial markets. Yeah. Those of us that have been around long enough are here to, we're here to talk about it, and we can experience and say, okay, yeah, we've seen this before. So those are the types of things that I think that we're facing, but we can go into a long talk regarding that. We shouldn't, because there's a lot of things that are actually happening right now. One of the things in particular that I think we should be talking about is crude. And I know I mentioned it a lot this week. I was on the webinar with Chris Weston from Pepperstone earlier this week. Talked about this, bearish reversal, closed back below 86.20. Yesterday, we actually did an outside day. We actually hit new highs and then reversed. And then today, we're getting a little bit of a lift here, but still, we closed the week below, let's just call it $85, kind of where we're at right now. You got to be careful with crude. Now, I know there's some other things that are circulating around crude. It's just not, the price of crude. We have the whole situation of Russia and Ukraine. Do you guys have any updates on what's happening there?
It's still snowing, and they're still building up troops, but apart from that, there's not much going on.
Come on, you're closer to there than I am, for crying out loud.
Just a quick thing that struck me, because we had it on the news yesterday, and they had satellite images of everything, and it all looks for show, because the way Russia has got everything lined up, all their armaments, their tanks, their trucks, and everything, one strafing run and it'll be gone. Anyone wanted to hit that, it'll be gone. So that seems to me to say this is all talk and bluster, because you don't line up everything in a long strip that can be taken out in one hit with a drone or something. So that was the funny thing I saw from the news yesterday. Interesting.
Well, as long as that doesn't now here's the other thing. I want to talk a little bit about crude. I already have some short exposure in crude. Those of you probably know that already. But if there's an escalation, a lot of people feel that we're going to spike higher in crude. I kind of think that it's buy the rumor, sell the news, because of some of the data that's come out over the last recently, just with crude data. What are your thoughts there?
I think the knee-jerk reaction will always be there. I think if something happens, the initial reaction will be for crude to probably spike. But I think you're right. But you faded. Yeah. I think you faded. Yeah.
In this
case, what you're saying, I agree.
Yeah,
Go
once you
ahead,
know what's
Ryan.
happened. Sorry, once you know what's happened, you know, if it's just a silly little thing, then yeah, you fade it. If it's something more serious, then
And you know, then again, you know, nothing could happen too, and crude could tail off here. But I think technically you got to think about that. But you also have to keep in mind, like for me, I'm short enough or so little amount of crude that even if it spikes to new highs right now, it's not going to hurt me. And that's the thing you have to keep in mind, because you have to consider the circumstances and why it's moving higher. And so, you know, for me, I don't want to be overexposed on a move like that, you know, on a move that spikes us to new highs. So just wanted to talk about that. Now, also one thing I need to talk about today is the Kiwi. The Kiwi is breaking down bigly. Now, again, this is I don't want to harp on the fact that I talked about this 2 days ago with Chris Weston on the Trade-Off show. By the way, I was knee deep in COVID and managed to, you know, comb my hair, jump on a camera and do that damn video because it was a commitment I made. And I was feeling like absolute 100% garbage on that show. So if you go watch that show, just think about, I was feverish and chills as I was filming. So, and that's not to make you feel bad for me, but what I want to point out is that there's the importance of these setups were really there, and the Kiwi is now showing it, and it's breaking down. I mean, this is a really key support at 67 cents. And one of the things I want to point out about the Kiwi, and I believe it was my chart of the day yesterday, if you read our blog that's free, chart of the day yesterday. Yeah, I actually put it on yesterday before it broke down. I mean, we're just sitting on channel support. I gave you all the reasons why it was going to break down, and here we are breaking through or getting close to breakthrough support. And this is really going to put the 64-cent level in play. Now, Ryan, you might not be so comfortable seeing this because I know you know this, but the Aussie and the Kiwi tend to have a very strong correlation. So does this worry you if the Kiwi starts breaking down, or are you going to start, you know, thinking about, you know, how that might affect your Aussie trade?
Yeah, it's definitely a consideration. I've actually got some bids in at 67.05 because I've been keeping an eye on that 67 level for quite a while. So just have a little scalp of the big figure and the support there. Yes and no regarding Aussie dollar. You know, the RBNZ is in a hike cycle. So, you know, expectations there are all priced. It's a similar theme to the Fed. You know, once you hit a central bank that actually is taking action, you know, you tend not to see the currency rise past that point unless there's other fundamental drivers. So the RBA is obviously in a different place. They're still holding out on hikes. So I don't see a material difference on the rate divergence play. You've got to look at
Aussie New Zealand.
Kiwi, yeah. And, you know, and there you've got the reflection. You know,
I mean,
last year we had the RBNZ hiking. You can see you get the dip there, while the RBA is still easing or staying on the dovish side. You know, that gets you your dip, and then as soon as the expectations are all priced in, it goes the other way. You know, it's the same consequence with euro sterling. You know, and the ECB and the Bank of England. You know, this is why the crosses are good for these closely connected currencies.
Well, you know, and I'm glad you pointed that out too. And you know, and then you have the Aussie Kiwi as you're just mentioning. I mean, this is you know, really trying to break higher here. One of the other big banks said they still like Aussie Kiwi longs. I think it was Goldman this week. I forget. I'm a little foggy this week, so I'm just, you know, trying to get my head back on straight. But anyway, it does look good. But the one thing I want to point out around the Kiwi, and this is one thing when you're trading currencies that I tend to do, especially when I have a position. Like for me, I'm long. Let me get over to the Euro New Zealand. So, you know, you guys know, well, the ForexAnalytix members know I've, you know, been long because of this inverted head and shoulder pattern for the Euro New Zealand. Now we broke this pretty big trend line. You know, it's, you know, you can say it was a complex inverted head and shoulder pattern, whatever you want to call it. It was we've cracked this trend line actually a couple of weeks ago. So I've just been kind of patiently sitting in it, expensively, but sitting in it. But when I start to see a currency break, I have to look all the way around, around the entire spectrum. So, when you got the Kiwi breaking lower, you go, okay, well, here's the Kiwi breaking lower and that flag. Well, you take a look at the Aussie New Zealand, that's breaking higher. Then you go over to the, Kiwi yen, you're like, oh, that is a damn failure, outside of that channel. Great. You go to the Euro New Zealand and say, well, that's been holding above 2 for a long time. We had a bullish wedge and, we're finally, cracking higher. We've got, maybe up to 204 before we start to find some resistance now at this 127% extension underside of this previous channel. But there we go. You got some room there. New Zealand Canadian is, damn near falling out of bed. So when you have a currency really breaking down across the board, that gives you some comfort when you're trading that individual currency. So that's kind of one of the things that I like to do when I'm trading around. So anyway, another
thing to mention actually on currencies. We had UK retail sales today, very, very big miss, both the headline numbers and the revisions. So the pound is underperforming today. Euro pound is up 0.5%. And
well, I mean, Ryan's butt's puckered because he's seeing all the inflation all the inflationary pressures that we have in the US, and he feels it's coming over to the UK. Is that what happened, Ryan? Stop spending your money.
What money? What money? We don't have money over here.
Well, hey, well, Kman's here too. Kman may have something to say about it too. Your neighbor over there.
Yeah.
TGIF, everybody.
Hey, good morning.
I heard you talk about the Russian and Ukraine situation earlier.
Wait. Well, yeah, we want to hear that. I do want to hear that. But
there's been an exchange of comments today by Lavrov and Blinken. They seem to head to more replies next week, even talking about February meeting. So I think most of the weekend risk may probably be gone. You never know, of course, with those people, but it seems like the weekend risk is gone for now. So that about this Russia-Ukraine situation.
Okay, well, that's a good update. Thank you very much, Kman.
Yeah, and then the rest of the currencies, as you were pointing at, the Kiwi breaking, we still have this 67, the figure where it's it held last time twice, right?
Oh yeah, everybody's going to be all over. I mean, no one who's long Kiwi wants to see.
And if you look at it a little bit longer term, there's another level, a trend line. If you take where is it? Your level in what is it? April, March, and then over the low, and then over the low in August somewhere in the Kiwi. You're right on it. That comes in at around. Just go. No. The other one, the other way around. And you see April. Yeah, that's the one over there. That comes in around like mid 66s.
Yeah,
could be in for a test over there. Aussie as well. I was showing on the chat this morning. 80.85 to me is a pretty important level. 71, 80.85. And going into the FOMC with all the expectations, I wouldn't rule out like breaks, even if they were false breaks into the FOMC. But the dollar should, in my opinion, remain underpinned into the FOMC now.
Yeah, I mean,
in general terms.
Well, we were sitting there trying to figure out, this last couple of weeks, how's the Fed even going to get more, how are people going to get more hawkish with their expectations?
Yeah, but those are expectations, right? They still haven't hiked. They still
right. They
not at zero QE. You have the expectations, one thing, and then maybe those expectations could deflate and then put pressure on the dollar. But then there will be the actual fact where they're going to zero QE and start to raise rates, right?
Right. And then you start to get moves from there. True. So
I agree, a lot is priced in. And,
A lot
and
is
people
priced
are
in.
reluctant, and we can see it in the EM sphere. The emerging markets are going nowhere, right? It seems that they are waiting for something.
Yeah.
If the
No,
Fed is
and-
going slowly, I think emerging markets can do better because they will breathe a sigh of relief that the Fed is not making their dollar debt too expensive. But if the Fed goes 50, I think then we could see a real reaction in the emerging markets.
Oh my God, they would get creamed.
Well, I think they would weaken anyway. That would be my logic expectation.
Yeah, I know. I'm with you. Speaking of which, and Kman, I'm glad that you're here. You and I have been talking to Rand for a while, and we're back at that neckline. And this is like this. The Rand is one of those that I played it to the long side. On this break higher. We were back testing the neckline here, and I've been really surprised at how strong the Rand and the peso too, to a lesser extent, has been in this environment with the S&P broken below 4,500. We are above the 200-day moving average, but with this fall in the S&P, you wouldn't expect the emerging market currencies to be as strong as they are.
That as well.
No, I mean, so what's your explanation there for that? I mean, coming from a man that's been on the trading desk for 40 years, what's
the flows of the week apparently have been, partially at least, is people being short Rand MEX, like being more positive towards the MEX because of the location close to the US. They have been short ZAR MEX for a while. That has been unwound, explaining some of the dollar ZAR coming off lower, but I'm with you on stocks, and it looks a bit bizarre, this rand move, because you can unwind, but then you can unwind for how long? You're not going to unwind for weeks.
Yeah. All right. Well,
I'm a little puzzled on the ZAR, really, honestly. I've been trying to buy it, and then I stopped because I can't stay long for very long because the funding is biting.
Yeah. Oh, yeah. And now that you and I trade retail,
yeah, exactly,
more expensive. I know. That's why I have to trade such small quantities. Right? What's that? Oh, anyway. Hey, listen, we have an interview coming up here shortly, and thank you very much, Kman, for your commentary.
Can I just add one thing?
Oh, okay.
We've got Canadian retail sales out, but be careful because they are November data. So we have seen in December retail sales across the globe having the tendency of coming off, as UK showed as well this morning. But they are November data. So if there's any algo moves on better numbers, it might be short-lived
yeah, and I'm glad you brought that up. And one of the things I would be saying regarding that data, let it be strong, because if the dollar Canadian spikes back down below, like let's say 124.80, I think you take it long because crude oil is breaking down. So you want to keep playing off this 200-day moving average, ascending trend line, double bottom. And guys, let me just point something out really quick. Before we go into our interview, and by the way, Dale is having computer issues this morning, so we're going to try to handle it ourselves with Sem. I don't know if he's here yet, but let us know if you're here. Please, say hello in the chat box. Take advantage of ForexAnalytix, the pricing. We do this, annually. This is our pricing that we do at the beginning of the year, and it's only here for probably the next week. If you guys want to see the most dynamic community, this is an example of this is what our community looks like. You can see Kman, who was just speaking a little while ago, his charts, wherever. There's Kman right there. We have, this is going to be, I'm going to show you when I got up this morning, which was only an hour and a half ago that I got in front of the computer. Was somewhere around, let's see. Yeah. Good morning, everybody. TGIF. That was my comments from an hour and a half ago. And you can see all the talking that's been happening since then. And that's just in the general chat room. And here's the Spanish chat room. Here's the Forex Flow macro room. Here's the news and research room where we post news and research things. And then here's our trades, and people that put their trades or just want to see in the trades room, that's there. So you guys want to get involved in our community, that's what our community looks like. And this is what the platform looks like. And you get so many different features like the data flash, which we'll be looking at retail sales that just came out, and live squawk feed right here. So what's up with retail sales? Anybody? Bueller.
A bit weaker than expected.
Oh, okay. I was hoping
Almost weaker. The 0.7 on the month-on-month instead of 1.2 expected. The core ex-autos 1.1 versus 1.3 expected.
All right. Thank you very much.
A couple of pips weaker.
Okay, there's the core
Oh,
retail
and they're
sales.
saying that the flash for next month, for December, is estimated at down 2.1%. So there's the switcheroo.
Got it. All right. Jim says his name is pronounced Gem. Is it Gem? Gem. So I'm looking for Gem. Do you see him? Do you guys see him? Oh, wait. Is that him right here? I think this is him. Let me see if I can sorry guys. This is my Stelios, you're still here? Take that as a no. Looks like I'm on my own. Let's see.
I'm still here, though I'm not sure what I can do.
Yeah, you know, I'm just looking for oh, okay. I see you, Gem. All right, let me take it. Okay. Your last name wasn't the same. That was the problem. Okay, hold on one second. All right, give me 1 second. All right, guys, you're in good shape. Gem is here. Gem. Let's see.
Hey guys, can you hear me? Can you hear me?
Gem,
Okay?
how are you? Good morning.
Good morning. Sorry for the confusion.
Hey, no, you know what? I did. Your name came up a little differently, and my name's Blake. Nice to meet you, by the way.
Nice to meet you, Blake. I'm used to my name being a little different.
Yeah, you know,
problems very often.
you know, Dale's here. He's having some computer issues this morning, so I'm just going to hang out with you today. You have to excuse my. I've been sick this week, so I'm kind of at the tail end of it, and so kind of I'm kind of filling in for Dale. So I'm going to be here just kind of chatting with you and meeting you. And I know a lot of people showed up to hear you specifically, so I want to thank you for being here. But before we get started, I just want to thank everybody else. Thank my team. Dale. Hopefully he can get back here. Ryan, Kman, Stelios, thanks guys for being here this morning, and everybody that had tuned in for the F.A.C.E webinar. Thanks for being here, and make sure you stick around because I'm gonna sit around here with Gem, and we're gonna talk a little bit about the markets. I'm gonna get to know him a little bit, and so let's go ahead and get started. So, Gem, did you want to show your charts, or did you? I'm again. This is first time me meeting you, so I'm.
Yeah. No explicit presentation, just
okay.
Here for the conversation. Yeah.
Great. Well, good to have you. So tell us a little bit about yourself. How about that?
Yeah. So I was, one of the biggest market makers in the great financial crisis in the equity index vol space. So we were about 13% of the volume in the S&P 500 in those crazy days. I started the business in '98, so I came into the market introduced in the middle of long-term capital. So the way I've always seen the market is very much not a function of cash flows or fundamental values, but really how many buyers are there and how many sellers are there, and what does that mean for price. So very different. Very different approach. A lot of what we do here at High Volatility, and what I do for my own capital since I left the market making business is both relative value vol, which we're obviously experts at, but even more important where are dealers positioned? I was a dealer. I understand the effects that come off of that positioning better than most. And so we use that information for both directionally positioning as well as, in underlying markets as well as in vol markets. So, if there's something that kind of, you guys hear a lot from entities like Squeeze and Spot Gamma, a lot of that stuff was me, boots on the ground for many years. So, that's what we do for our institutional investors.
It's amazing how, positioning plays such a big part in the markets. And it's one of the things that I've learned, since, like you, I started trading in the 90s as well. And I really came to that conclusion. Probably it took me a good decade to really figure out the fact that the market really is more position based. And it doesn't matter what everybody thinks should be happening in the market. If the market's too aggressively bullish or bearish, it flips pretty easily, and it doesn't take a lot to do that, right?
Yeah, absolutely. And in particular with the that was always the case. And the vol effects that I most track always had a role, but obviously with the increase in vol positioning, we have more kind of predictable structural effects than ever. They've always been there. But it's important to note a stock or a bond doesn't have decay, right? It doesn't change its delta. It is a up or down bet. It is a summary of the distribution of potential outcomes. That distribution of outcomes is laid out in the option chains of these things. And so as that kind of probability decays based on time or vol, you have certain effects to the dealers who are running quantitative models. So the underlying structure of markets is much more complicated than your average investor thinks. It is, and there are structural demand, supply and demand flows that run off of that derivative positioning in the market and the risk models that underpin kind of risk reward calculations in the market. So I think that's the most important part to positioning. I talk about this a lot on social media, but like the VANA and CHARM flows are the delta effects. The VOMA and beta effects are the vol effects. And those effects change based on time and vol and can have major effects, particularly on days like today, which is options expiration.
And so, you know what, actually, I'm glad you brought that up. Near had written in, said, Jem, thoughts today on today's OPEX under 44.50. We're going to see the evil side of VANA A. Still some considerable options at 44.50. So just, a couple people are asking some questions about OPEX today. And you have any opinions there on the S&P?
Yeah, so a couple of things. Friday into Monday of OPEX historically, and for good reason, into the open, it's the AM print because these prints are AM. For the majority of the volume, tends to be supportive into the open. After the open, you tend to get stress if and when you are going to get stress. So kind of things to look for, after the open, first of all, don't be surprised by a little V up on the open. That is essentially the charm and VANA effects of the expiring contract disappearing. After that, if you see a slow in momentum, time to be very cautious. I preach very, regularly, my followers will know kind of be water, right? Like the way to be successful in this business is not to be dogmatic and to have some big opinion on up or down as much as everybody wants that. The reality is to play your edge. And the reality is this Friday into Monday is, has a tail on it. That said, the market is very, very obviously oversold by every measure. There is a lot of stress. There's a lot of things that you see as you start to get towards the bottom. But trying to catch that bottom, trying to catch that knife on a Friday of OPEX is a fool's errand. So you want to be looking for opportunities into a stressful close, particularly into a Monday open that's stressful. Those are good spots to pick a bottom. It's not to say we can't turn today, but the risk adjusted returns aren't as high. Definitely would be looking for a late Friday entree if you're going to try and get long. Making sure that the tails are not an issue. Pair with that the fact that we have the Fed coming on Wednesday, right? Huge Fed decision. It's going to keep buyers and sellers right in their hands in their pocket. So any big push, if there's stress to the downside, there's just not enough liquidity. Got to watch the downside today into Monday morning. If that comes off the table, you got to be bullish, right? This is this is obviously oversold on a short-term basis in the context of a very structurally kind of set of bearish developments. So you got to be looking for that opportunity for that counter trend rally if and when. Again, I would be very cautious doing it today on a Friday, but at the very least, kind of on a Monday morning, if things are clear or get some stressful, that would be your kind of sign.
Yeah, well, I mean, one of the big, long time plays, the turnaround Tuesday, it would play right into that hand, and it's really hard to fade it on a Friday, especially seeing this weakness coming into Friday at this stage, right?
Absolutely. Yeah, I mean, again, I look less at the Tuesday, Monday stuff. I think the reality, the day of the week matters less than where, what week it is, in my opinion. And, that Monday, again, that weekend vol, you also have to realize there's a certain number of people out there, as institutions who are having hedges roll off, right? Those hedges, when they roll off, leave people kind of swimming naked potentially. So, that is a recipe for increased risk in this, specific, call it 24 to 36 hour trading window. And so time to be, not a hero, and really kind of be water, look for small opportunities, take your edge. It should be pretty volatile, I think, in the next 24, 36 hours. If again, you get a stressful bottom on Monday, something that looks really bad, that would be, when there's blood in the street, that'd be a time to buy. Or if kind of things clear and look significantly better coming into kind of a post Monday morning, call it 11 o'clock or so, that would also, or even maybe take a little bit of a shot Friday late if things really look like they're clearing as well.
Okay. I know you said a little bit earlier, you try not to be too directional. This is a play, it's not, directional, but do you have an opinion of how the markets have been reacting as of late, and the just the overall weakness that we've seen in the S&P structurally for the last couple of weeks? You have any opinions about the S&P at this point?
Yeah. So some big opinions. Actually, I've been pretty vocal that the Fed is in a box for the first time in 40 years. Right. This is we're in a macro problematic scenario. You've had honestly vol supporting this market up until this juncture. I mean, the fact that we are if you think about it, November, December, January, these periods should be incredibly positive times in a market with lots of liquidity. There's structural reasons for that in terms of the holidays, Ivana decay, charm decay. And we've not been able to reclaim the momentum we've had, which I think is important. The whole, adages that you hear about kind of, about January weakness and what that means. Same very true if you don't get the Santa Claus rally that you're expecting, right? Those things come or have structural underpinnings behind them. The reason that is true is because those should be very positive periods based on structural vol dynamics and other flow dynamics, especially in a big up year like we had. There's a lot of equity, being repurchased at the beginning of the year. That gets front run at the end of the year. There's a lot of, again, vol decay. All those things mean we should be up. We should have been up more during that period. So not getting that push is bearish structurally, and rates. Obviously, the Fed being asked to contend with inflation when they ultimately don't have control over inflation. I can get into my macro view there, but long-winded thing. But the reality is the Fed really can't control inflation. The only way they can control inflation is by slowing capital flow, capital market. So the markets will lead the next recession down as they usually do, and it will be driven by less liquidity by the Fed. Now, that doesn't mean that's happening today. That doesn't mean that we're not going to get a counter trend rally. It doesn't mean we can't get to even minor new highs, right?
Yeah.
But it does mean that there are slowing momentum, slowing, bigger issues in this market that hang overhead. And how you position and how you play a market like that is very different than a momentum-driven up market.
Yeah, it sure is. Well, if there's anything that's going to be good for us as traders, for those of us that love to participate, is getting the two-way price action that we haven't had for quite some time, right?
Yeah, I mean, two-way action. It's going to be more volatile. Yeah, I will say that. I think vol has been increasing, will continue to increase as we move forward here in the next year. I mean, if you think about most major tops, they happen with increasing volatility. So, I've been preaching for a while that it is time to, if you are a long equity trader broadly or like to play from the long side, stock replacement is the game right now. Calls are a much better expression of directional volatility, high directional market than anything right now. You could very well see situations where the market does climb, but that vol climbs with it in the months to come before a top, or at the very least, if it's here, if we are at a point of departure, at least you don't have that tail on your positioning. So much more actively traded volatile market, not one to play from the short vol side at this point. We're in a fat tail market. You can win a few, but it really is the proverbial picking the penny, nickels up in front of the steamroller at this point, given the size of the steamroller and how close those nickels are to the steamroller. You have to be playing other games.
Right. That's a good way to put it. Hey, Jem, do you mind if I ask a few questions from some of the people that are listening in? They came in specifically to hear you. So do you mind if I address some of their questions with you?
Of course, no problem.
All right, great. Let me see. So, I'm sorry, I got to go. I'm going back just a little bit. Let's see. Jem, this comes from Amar. How's volatility under the hood? Is the market hedged for FOMC?
The market actually is relatively well hedged for FOMC. The problem here is that, and the market has been, it's important to say, the market has actually been, relative to history, relatively well hedged. That's part of why the action has been relatively contained, despite the massive current that we've seen. Obviously, a lot of stocks topped in February, right? You have more than 35, I think it's now 40% of the NASDAQ is below its 200-day. Actually, the NASDAQ itself is not below its 200 days. I guess so. We have more than 50%. So we're at a situation where the S&P relative to everything else has been well contained. Vol has played a supportive role. It's the structural flows, the bond market, the rotation and the stress, in tech and duration, that is really driving this. And so it's a relative, as vol itself kind of starts to break, and that really just takes a big enough move eventually and time. As those things happen, you could get what something that looks a lot uglier. But if you don't get it, and people continue to be even better and better prepared or overhedge, right, then you'll get a rally back that might be big. So my point, I guess, is currently things are relatively under control, but watch macro. Watch rates. That's really what your tip off. It's not the vol as much. If you break enough here, this will become a kind of ugly on the downside, because the vol has been the linchpin, if you will, and continues to be. If that makes sense.
Awesome. Well,
Yeah.
Jake writes, he goes, thoughts on the 4,800 call spread, Jim?
Yeah, no, great question. So I was pretty vocal about this. There's a big player, massive player in the SPX in the big size that came in on decline, and he's done this many times, and he's been very good historically in the years past, and bought the 4,800 call spread 20,000 times each in Feb 11th and Feb 18th. He then doubled down. I mean, he didn't do it, did 10 and 10, and then he came back and did 10 and 10 into a decline. Started around 45.75, 4,600. Then he added again somewhere around 45.30 the next day, and then yesterday he came in and bought the 46.5, 47.5. 4,800. I apologize. And so at the end of the day, he is now up to 50,000 of these things. It's about a $20 billion notional bet. A little bit higher, 22, I think.
Yeah, that's fine.
Yeah. So right. So these things have reflexive effects. So, if you get going, it would be something that could very well pull you up to kind of that 4,800 area. Basically the dealers on the street are massively long the 800s. They're short the 4,700. So, they get short gamma into that 4,700 area and long gamma into that 4,800 area. So, it could be one of those things that pins the market if we get back up to that 4,800 area and provides resistance. He'll also have a lot to monetize if we get up to 40, if we got a real rally back. So those are things that can help you in your positioning and determining how to play if we were to get a rally. It could also, like I said, provide convexity to the market into a rally back that could take, if you get above 4,600, these things could really, or 45.75, these things could really run up. He likes to do it before the Fed. This is something, that he's definitely thoughtful and mindful that Fed meetings tend to be kind of positive events. The Fed has every reason to try and calm the market historically.
Yeah.
But we'll see. Again, just another kind of piece of the puzzle.
Right. Okay. Well, hey, Jim, I just want to say I really appreciate your time here with the community here at ForexAnalytix. One last question, if you don't mind.
Mm-hmm.
Yeah. So Near writes thoughts on, now this is more of the FOMC next week, but wondering if you think there might be a dovish surprise from the Fed versus a hawkish surprise, something that the Hang Seng experienced. Any thoughts on maybe a dovish surprise next week?
Yeah, I mean, look, the reality is sentiment is getting pretty ugly. Everything is oversold. There's every reason to be looking for a buying opportunity in the context of, a bigger macro kind of issue, right? The problem is, again, there are big structural issues. There is stress out in the market right now on a structural level. So picking that bottom can often be, hard. My view is that the market is looking for an excuse to rally. The Fed could very well provide that, even something that, ironically, may not be that bullish could, the interpretation or the excuse to kind of interpret something, there might be a positive. It's also, an event. So vol is higher, and you have, on these events broadly, a little bit of kind of Vana and charm buyback. So Fed meetings have a reason for being bullish. The Fed, again, has every incentive to try and calm the market. And so, yeah, would not surprise me. Importantly, it almost matters less what they say. And we're in a position to accept and to interpret news as positive, and the Fed is likely to try and give that news. So, despite whether that's actually dovish or not, I think the market is prepared for some type of relief in the medium term.
Awesome. Well,
but to be clear, it could be coming from. Sorry, to be clear, it could be coming from lower prices from here. I don't want people to, on a Friday, to try and jump in and buy it here. right? Again, let's look at it towards the end of the day. Let's make sure that kind of there's a bit more calm, and then again, dip your toe in late Friday if things are calm, or Monday morning on after the open, or if there's stress into it.
Yeah, you don't want to get it stuck in that illiquid vortex on a
Exactly.
Friday,
Exactly.
So, well, Jim, I would say really nice to meet you. I unexpectedly I did not expect to be interviewing you today. And Dale does apologize that he's going to have one of our guys help him out with his computer and see if he can fix the issue. But I want to say it's been nice chatting with you. Nice to meet you. And I know people that are listening in right now specifically have come in to listen to you. Really thank you for your time today. And I'll look forward to the next time Dale sets up a meeting, and I'll be sure to listen in this next time.
Thanks, Blake. Appreciate it. Good luck, everybody. Be water. Have a good one.
All right, Jim. Have a great one.
Take care.
And folks, I just want to say thank you all for tuning in. And, remember, if you guys are not part of the ForexAnalytix community, make sure you check us out, get involved. This is the best pricing that we offer on an annual basis. And we have one of the most active communities in the trading sphere. So thank you all for joining us this week. And for those of you that have been with us all week long, I'll see you over the weekend on the week ahead video, and then also on Monday back at it on the F.A.C.E webinar. So you guys have a great weekend, and we will talk to you soon. Thank you.